Ever felt like you're standing at a buffet, but you're blindfolded? You know there's a feast of investment opportunities, but you can't quite see what's on the menu. That's how a lot of people feel when they first encounter the world of online brokerages, especially when it comes to account types. You hear terms like TFSA, RRSP, margin, and your eyes start to glaze over. And let's be honest, who hasn't felt that pang of am I doing this right when it comes to their finances? We all want our money to work harder for us, to grow, to build a secure future. But navigating the complexities of investment accounts can feel like deciphering ancient hieroglyphs. Today, we're going to demystify one of Canada's most popular online brokerages, Questrade, and break down their account types. We'll strip away the jargon and give you a clear, concise understanding of what each account offers so you can make informed decisions about your financial future. Whether you're a seasoned investor or just dipping your toes into the market, understanding these account types is crucial. Let's start with the cornerstone of many Canadian investment strategies, the Registered Retirement Savings Plan, or RRSP. The RRSP is designed to help you save for retirement, and it offers significant tax advantages. When you contribute to an RRSP, your contributions are tax deductible, meaning they reduce your taxable income for the year. This can result in a significant tax refund, which you can then reinvest to further grow your savings. The money within your RRSP grows tax-free, and you only pay taxes when you withdraw the funds in retirement, presumably when you're in a lower tax bracket. Questrade offers both individual and spousal RRSPs. A spousal RRSP allows a higher income spouse to contribute to a lower income spouse's RRSP, potentially leading to lower overall taxes in retirement. This can be a powerful tool for couples looking to maximize their retirement savings. Next up, we have the Tax-Free Savings Account, or TFSA. Don't let the name fool you, it's not just for savings. The TFSA is a versatile account that allows you to invest in a variety of assets, including stocks, bonds, mutual funds, and ETFs. The key advantage of a TFSA is that all investment growth and withdrawals are tax-free. You contribute after-tax dollars, but you never pay taxes on any gains you make within the account. Unlike the RRSP, TFSA contributions don't reduce your taxable income. However, the tax-free growth and withdrawals can be incredibly valuable, especially for long-term investments. Questrade offers both individual and family TFSAs, allowing you to manage your family's savings more efficiently. Now, let's talk about the non-registered accounts. These accounts don't offer the same tax advantages as registered accounts like RRSPs and TFSAs, but they provide flexibility and can be useful for those who have maxed out their registered account contributions or have specific investment goals. The most common non-registered account is the individual margin account. A margin account allows you to borrow money from Questrade to purchase investments. This can amplify your potential returns, but it also amplifies your potential losses. Margin trading is generally considered riskier and is best suited for experienced investors who understand the risks involved. Questrade also offers joint margin accounts, which allow two or more individuals to trade together. This can be useful for couples or business partners who want to manage their investments jointly. Another non-registered account is the cash account. This account doesn't allow for margin trading and is suitable for those who prefer to invest with their own funds. It's a simpler account type and a good option for beginners or those who want to avoid the risks associated with margin trading. For those looking to manage a corporation's investments, Questrade offers corporate investment accounts. These accounts are designed to meet the specific needs of businesses and offer features like segregated funds and the ability to manage multiple portfolios. Now, let's delve into some specialized accounts. Questrade offers education savings plans, specifically the Registered Education Savings Plan, or RESP. The RESP is designed to help parents save for their children's post-secondary education. The government provides grants, such as the Canada Education Savings Grant, CESG, which can significantly boost your savings. The RESP offers tax-deferred growth, and withdrawals are taxed in the hands of the beneficiary, typically the student, who is usually in a lower tax bracket. This makes it an efficient way to save for education. Questrade also offers locked-in retirement accounts, or LIRAs. These accounts hold pension funds that were transferred from a previous employer's pension plan. LIRAs are similar to RRSPs, but they have specific rules regarding withdrawals. Finally, for those who want to manage their own small business or freelance income, Questrade offers self-directed business accounts. These accounts allow you to invest your business profits and manage your retirement savings as a self-employed individual. Now, you might be wondering, which account type is right for you? It really depends on your individual circumstances, financial goals, and risk tolerance. It's important to consider your investment timeline, your risk tolerance, and your tax situation when choosing an account type. If you're unsure, it's always a good idea to consult with a financial advisor who can provide personalized guidance. Questrade also provides a wealth of educational resources on their website, including articles, videos, and webinars. These resources can help you learn more about the different account types and make informed decisions about your investments. When deciding on an account type, you should also consider your investment strategy. Are you a passive investor who prefers to buy and hold index funds, or are you an active trader who likes to pick individual stocks? Your investment strategy will influence the type of account that is most suitable for you. For example, if you're an active trader, a margin account might be more appealing. However, if you're a passive investor, a cash account or a TFSA might be a better fit. Finally, consider the tax implications of each account type. Understanding the tax advantages and disadvantages of each account can help you make informed decisions about your investments. Questrade offers a wide range of account types to meet the diverse needs of its clients. By understanding the features and benefits of each account, you can choose the one that best aligns with your financial goals and risk tolerance. With that said, thanks for watching, and until next time.